MD at Prabhudas Lilladher to chat a little bit about the fundamentals of the markets. And Dilip, would like to draw your attention to IT. What's going on with some of these stocks, heavyweights like Infosys, HCL Tech, Wipro, all are having a fairly rough run. What's the expectation, more importantly, in terms of the cross-currency headwinds and how that could impact Q2 numbers for HCL Technologies?
So, we have been telling that except for the tailwind in terms of the rupee depreciation, the secular story in case of IT has not really been very clear for any bull case. And I think as we hear a lot of noise about H-1B visa and a host of other things which is related to that trade war also, I think the fears is gradually seeping in that maybe the secular story is not going to pan out, and the results which have just come out so far of all the IT companies do indicate that the margins are not really all that great, and they are in a way kind of tepid, muted, you call it, or maybe weak. But the outlook also has not been, the language also has not been very confident. So I think having had a good run up, the IT possibly was ripe for a profit taking, especially in this kind of a market scenario, where people are looking to book profits, take profits home, cut the losses which they might be having elsewhere. So I think all those things are taking its toll on the IT at the moment. But all said and done, IT per se as a story still is not very clearly spelled out in terms of buying this particular sector.
Dilip, Siddha joining in conversation. Now, early part of September, Amisha was on our channel and she was sounding quite cautious on market, and that time Nifty was around 11,400 or so, and her caution has played 10,100 now on Nifty. At Prabhudas Lilladher, are you guys still very cautious on market, or you think there's 10% correction in Nifty, more than 20% correction in mid cap, almost 40% correction in some of the small caps has brought this market in value zone, or if not value, at least in accumulation zone? What's your overall thesis at this point of time?
Sure, I think I always assume that the outlook which we give or any of my colleagues are giving over here, they are for longer term and not for the shorter term. So I think in the longer term, yes, I think it looks pretty interesting. But let me tell you, having said that, market looks very vulnerable at the moment, even at the current levels, in spite and despite the fact that it has come off quite a bit. And maybe some of the things have really been in an oversold territory without any doubt. So, before I say something, I think some of these factors are causing a huge worry. It's not now just a question of whether the ILFS problem can be fixed. The question is the repercussions of ILFS on the system as such is really playing out. And there is a fear factor which is running deep and very intense at the moment. So, every day or every other day you hear some news about something. Now the question is whether it is right or wrong. It's going to take its own sweet time for people to really clarify. But in the fear factor, especially when the fear runs so high, everybody is playing it safe and trying to avoid the risk. So the risk aversion has been pretty high. So any small news and people are ready to sell off and run out of the scripts. So I think that is currently the scenario, and so from the current levels, whether the markets can still come off, very much possible. I think that looks very much on the cards too, that markets can still come off Sensex by a couple of thousand points even from the current level. But yes, we do not know what is the bottom and what is the top. But I think if you are really in for a long haul, I would say that, say about a year and a half, then maybe you start your SIP in investing in the markets from the current levels and spread it out your entire, suppose if you want to invest 100 rupees, spread it out over next 7 to 8 months or 8 to 9 months, and then you're really averaging out on the entire situation, because right now it's one of fear, panic and chaos.
First we saw OMCs correcting because there was some intervention by government in form of you know, I don't know whether using subsidy as a right would be a right word or not, but they would bear the brunt of 1 rupee. And then after that we haven't seen crude oil price going up. It has come down, and now as we speak it is sub $79 per barrel, and the free pricing is still in place. But we have seen massive correction taking place in OMCs. From fundamental valuation perspective, do you find OMCs attractive at these levels to invest in?
So my reading of the situation is that the OMCs which were post 2014, when the Modi government took over and when they made it so very public that they would allow free pricing of the petroleum products, I think that was received with lot of cheers, because the main thing was you are not going to be dependent on subsidies and so on and so forth, and you'll have your own cash flow, and market really cheered all this news. And so I think it was a very proper secular story, from being underpriced to the way it went up. And OMCs, rightly so, they got a good valuation. Now the question is not whether the oil prices are going to fall, so as a result they will get back their margins. The question is, the government has intervened once recently. Now in a run up to the elections, I think we are not too sure, they may not repeat it, but we are not too sure whether this interference will continue. And that fear is always going to be overwhelming and playing in the minds of the people to allow any possible objective evaluation of the fundamentals of OMCs. Now whether they have come back to a proper value, real value, and whether they become a good buy. I think till the time this oil continues to be a little more volatile, and till the time the central elections happen sometime in 2019, this fears will not go away, and in my opinion the OMCs will continue to be the one, at best will be a trading calls, but I don't think that there will be any serious investor ready to take a secular bet behind OMCs, howsoever attractive the valuation may be at the moment.
You know, not many people come out and say that, you know, they are cautious on markets correct 10%, and still they maintain their cautious stance. And you have been, you know, sticking your neck out and talking about, remaining a bit cautious on this market. But at the same time, you're also saying adopt a stock specific approach. So give us, or give our viewers, you know, 2 to 3 stocks, if you can, which you feel that even in this downturn or in this cautious environment, these stocks, if not, you know, a big up move, but at least would ensure that your capital won't be eroded too much.
Sure, I think apart from being stock specific, I think the way we are in this particular environment, it's better to be in the known names, particularly in view of the fact that some of the good known names too have come off in a very big way. So I think within that space, I would still stick to something like maybe an ICICI Bank, because I think the corporate banking now will come into action in a very big way, and possibly ICICI on all the parameters looks very well placed to capture the opportunity of the corporate banking, which is now re-emerging. So ICICI Bank looks good. So on the financial side, I would say even something like Bajaj Finance also would look pretty interesting, because they are very well capitalized. They don't lack any resources in terms of funding requirement. So I think that would look good. Something like Larsen and Toubro also, in my opinion, looks pretty interesting and pretty safe on a risk return basis. I think with the kind of order book that they have, and even if there is some kind of slowdown in any intake of the orders, possibly their execution is something which will play out quite well. So I think Larsen Toubro looks pretty interesting even from the current levels. So these 2-3 names are really one which I think one should really focus on. Of course, I am not mentioning about HDFC Bank. They are always evergreen. You know, they need not they don't need any special mention. But I think these 2-3 stocks very specifically are the ones which one should focus on.
Well, even that HDFC Bank is that mammoth name, and which has done really well time and again has corrected substantially in this kind of market. But yes, L&T and ICICI Bank, those are two stocks which Dilip is mentioning that one can take exposure even in this cautious and a market which says that there can be further weakness. Dilip, thank you so much for joining us and sharing your insight and giving your stock ideas to our viewers.